Folks, I'm going to talk about two things creeping into our real estate market and then get into the latest home prices and insights for the Peel and Durham regions for week ending October 25th, 2023. Two things. Thing number one, vendor takebacks. Now, this is when the seller lends money to the buyer to help the buyer buy the seller's property. Let me explain. The property, let's just say the seller is selling a property for $1 million. There's a buyer who wants to buy it, but the buyer only qualifies or can only get financing for up to, say, $850,000. But the buyer really wants to buy it. And the seller is in a position where they're usually cash heavy. They really don't need all the money, but they'd like to sell their property. And they basically say to the buyer, look, my house is $1 million. You want to buy it for $1 million, but you could only come up with $850,000. I will loan you the other $150,000 to buy my house. Basically, in a nutshell, that's how it works. So the seller helps the buyer to buy the seller's house, a vendor takeback. The seller now is still part owners of that house in a sense, and the buyer is making their mortgage payments to the bank for $850,000 and for $850,000 is paying the mortgage, and for $150,000 is paying off the loan to the seller. Now, there are all sorts of aspects to this that can get and are very technical. There's terms, how long is that loan for? Interest rates, also what happens if the buyer doesn't, defaults on payment. There's all sorts of things that can happen, so it does get very technical. I would urge you, if you're going to get involved in something like this, do it over the eye of a lawyer that could properly write out the clause and explain to you exactly what this detail means. But we are seeing this more and more in our industry right now. The second trend that I'm seeing more and more are sellers selling but wanting to stay in the property, wanting to rent it back from the buyers for a period of 6 months to a year. Why would a seller do that? Why would a seller sell and then say, but I really want to continue to stay in the property, I'll rent it for you? Well, two reasons. One is the seller truly believes that in 1 year from now, when they really want to leave their house, prices will be much lower. So their attitude is let's sell it today when prices are higher, and then we'll just rent it back so we don't have to leave our house until we're ready. So that's one reason. The other reason is the seller needs money now, and they don't necessarily want to take out a home equity loan. Maybe they're retired and need the cash now to do other things with, so they'll sell it. They don't want to move. They want to stay there for a little while. And they're hoping that the buyer is okay with buying the property and not wanting to move in themselves. Those are the two trends that we're seeing more and more. Now, the general public doesn't necessarily see these statements on the listing because they're part of something in the listing that says brokerage remarks from realtor to realtor. I see these now more and more. One is the vendor takeback, and one is where the seller wants to sell but wants to rent back the property. It's a sign of the times, I guess. We're going to see these more and more coming in as market is trending downwards right now, and we see these in a declining market, especially if the vendor takeback. If the seller's having a hard time in finding a buyer, and buyers are having difficulties in getting financing, sellers that have a lot of money may help the buyers to buy their own property. So these are examples that we're seeing more and more. If you feel this video can help somebody you know, please pass it along. If you get value from what we're talking about, subscribe. And if you want to speak with me about your real estate situation, it's really simple. Below this video in the description, there's a link to my calendar. Click on that, book a time that's convenient for you, and we'll talk about whatever's on your mind. Now, let's get into the numbers. Folks, home prices Average home prices, they're coming down. They're hitting new lows. Let's get right into it. What I just said, not so much in Mississauga. Mississauga, actually, when you look back, although I've got the line here for post-Labor Day, Mississauga, going back 3 months on this chart, average prices, and this is just for detached properties. When you average it out, it looks like prices are actually quite steady in Mississauga. They've been steady for a while. But Brampton, Durham, prices are coming down. I'll show you how low these numbers actually are. We're going to start off with Mississauga, however. Sales dropped 1 week to the next. For week ending October 25th, 29 detached properties were sold in Mississauga. That's not a lot of properties being sold. 29 were sold. 6 of those were at $2 million or more. Average sold price did go up a bit to $1,466,000. But if you kind of look back, I drew a straight line through it. Yeah, prices from 1 week to the next, they go up a couple weeks, down a couple weeks, but they've kind of been pretty flat overall. Compared to last year, $1,466,000 is 1% higher than last year's average sold price. The median price is 2% lower than last year's median price. The blue line is the median price. Now the dotted line, that's a 4-week moving average. And look at average sold price. You could look at median price also. The dotted line, the 4-week moving average, it's kind of flat. And this is a chart for 3 months broken down by week. So Mississauga detached prices have been quite steady. A lot of what we're talking about as far as prices tumbling pertain to other areas. 29 were sold, 31% sold at list price or more. Listings has been coming down. Active listings has been creeping up, not aggressively, but active listings is starting to pick up. Months of inventory, 4.8 months of inventory. It was actually coming down a little bit, and that helps to explain why prices were going up a bit. But at 4.8, well, sales were so low, and it takes the new sales figure as the norm. And now all of a sudden we have more inventory available because of that. Well, more months of inventory, 4.8 months of inventory. Let's look at Brampton. This is what I'm talking about. 21 were sold. That's it, 21. When we look back over the course of a whole year, there's only 1 week, December 28th, where we had lower sales than 21. And it was 17, and that was the week of Christmas. So 21, extremely low, no matter how you look at it. No property sold at $2 million or more. An average sold price is $1,093,000. It's been coming down for a while now. Not every week, it's been going up and down, but the trend, even though prices have been, they fluctuate week to week, the trend is a steady decline. $1,093,000 is far lower than the lowest month we had last year, which was October last year. So the same month that we're in a year ago, the lowest last year was $1,163,000. We're at $1,093,000 right now. So quite low. Compared to last year, $1,093,000 is 6% lower than where prices were this time last year. The median price is 1% lower than this time last year. 38% of those 21 that sold at list price or more. Now, you got to be careful how you read into that. 38% sold, you could think, well, more than a third. People are still lining up to compete. Maybe. But what if a property's been listed for a long time? They're not getting any kind of action, no activity, no showings, no offers. And then the seller says, I absolutely have to sell, drops the price really low, and then boom, it sells right away at the list price. Or maybe even a fraction over because someone else is trying to buy it. So it seems there was competition, but that price had to be slashed for buyers to jump in. So be careful how you read into the percentage of properties selling at list price or more. Listings has been declining. Active listings has been increasing. But remember, sales this week dropped really, really low to 21. Look at months of inventory, 8.4. Now, for this week, we're taking the attitude that if we continue to sell only 21 a week, that's how much inventory we have. 8.4 months of inventory. That's a dangerous level. It's by far like way, way past what we would consider a buyer's market. And months of inventory has been increasing over a span of well, for months now, actually. Here's Pickering, Ajax, and Whitby. This is my Durham sample. Sales, 41 were sold, which is quite reasonable compared to what we've been selling since the beginning of August. So 41 sold, no property sold at $2 million or more. Keep in mind, these are just detached property figures here. Average sold price is $1,044,000. And if we go back for a year, there's not too many weeks where average sold price was lower than $1,044,000. Compared to our lowest month last year, which was November, the lowest last year was $1,090,000. That's the average for the month. We're at $1,044,000 for week ending October 25th. $1,044,000 is 1% lower than where the price was the same week a year ago. The median price is 6% higher than where the price was a year ago at this time. Of the 41 that sold, 44% sold at list price or more. Listings, kind of hard to say that they're going down, they're going up. Pretty steady, let's just go with that. Active listings, however, has been increasing. Months of inventory now sitting at 2.5, which is kind of where it's been the last few weeks, pretty steady, but overall, months of inventory has been increasing. And if we put a line here, which is pre-Labor Day and post-Labor Day, just because I break it down pre and post-Labor Day. Labor Day is a whole different real estate season for us, or post-Labor Day is a different season. You can see post-Labor Day, excuse me, prices jumped up, but just the 1 week, and now they've been trending down aggressively, average prices. This is condos. Condos for all of Peel region. Only 20 condos were sold. That's it. Not a lot. None of them were at $1 million or more. Average sold price is sitting at $607,000. 607 is 11% lower than where the price was a year ago. The median price is 6% lower than where the median price was a year ago. 10% of those 20 condos, 10%, it's not a lot, sold at list price or more. Listings, they jumped up post-Labor Day, but for 1 week, and they've been declining ever since. Active listings, the amount of condos available for sale has been steadily increasing. Months of inventory sitting at 8 months of inventory, way up there in the stratosphere. Here's a quick summary. Very much in a lot of markets, very much a buyer's market right now. Buyers are in charge, especially when it comes to condos. Brampton, you're going to feel it. There's going to be parts of Mississauga that you're going to feel it. And Ajax, Pickering, and Whitby, look, it's sitting at 2.5. It's going to be, though, more of a balanced market, even though technically we're sitting in a seller's market there. Here's where you got to look at the numbers and kind of know from your experience or my experience of being in the field with buyers and sellers, it's pretty much a balanced market across Durham region right now. Thanks for watching. Have a great day.